Welcome back. So I want to go over a few update videos today. I owe you several updates. I'm going to try to do those before I jump into more stocks, but if one of them catches my attention, I'll probably do a video on it. Like I said before, I'm not looking to just do videos for clicks. I'm trying to do stuff that I'm interested in, and the process of doing the videos helps me kind of solidify my understanding. So that's the game plan moving forward. One reason I haven't been posting as much is that whenever my stuff has been down, which it has been recently, I find that whenever I start looking at a bunch of stocks, all of a sudden I'm more likely to take action. And whenever stuff's down, I don't like to do that as much. I like to hold what I have. If other stuff was down and my stuff's up, now I'm looking right. But anyway, that's the gist of it. So I'm going to start with similar. I'm on Seeking Alpha. So if you haven't heard me say it before, Seeking Alpha is a partner of the channel. There's a link. It'll be the first thing on my description, and they have a 4th of July sale. So you can get a pretty hefty discount if you buy it now. Anyway, and it really does help the channel. So please do that if you want to support me and help yourself too, because I really do like Seeking Alpha. All right, so the first thing I want to talk about is Semler Scientific. This is a company I did a video on a few months, like over a year ago, right? So I love this company because it was a magic formula stock. It was easy to understand. They had one product. They had some regulatory headwinds, but in general, they had a really strong balance sheet with a ton of cash. And if you accounted for the cash, then they were selling for a ridiculously low multiple. Great return on assets, great balance sheet. I mean, it was a magic formula stock, so that stuff's kind of applied, right? All right, so recently what took place with these guys, though, is that they used all of that cash that they had and announced that they were going to use Bitcoin as their primary treasury reserve asset. Now, I'm a little late to this, more than a month late, but I did record a video at the time, but I decided not to post it because I thought I was too harsh, and I don't know. My true feelings are, I'm going to tone it down a little bit here. So I immediately sold whenever I heard this news, and I can tell you why, but I just want to show you, I sold, the news came out, and I sold, probably 28-ish, and of course it runs up over 40 after I sold, but as soon as that announcement was made, there was no way I was staying in it, right? Because the reason I invest in companies with lots of cash on the balance sheet and low multiples is that I'm expecting them to return that money to shareholders, and to use the money to buy Bitcoin is crazy to me on multiple levels. So primarily, even if I was a fan of Bitcoin, why would I want to invest in a company that's then investing in Bitcoin? That's just undue risk, right? I would just take my money and invest it in Bitcoin, right? So that being said, am I investing in Bitcoin? Absolutely not. And my reason for that, and I cue the negative comments, and I'm not going to be as negative as, let's say, Charlie is on it, or Warren, but I don't think that there's a way to find what the true value of something like that is. It's the same with gold. Like with a stock or with a company, I can look at it and say, okay, what are the future cash flows going to be? Discount those. Here's my idea of a fair value, right? With Bitcoin, who knows? You're only buying it because you're hoping that the price goes up. And somebody can say, well, that's what you do with any stock, but that's not the case. Like I said, you're buying stocks. If you're doing it right, you're buying them as pieces of businesses. And I don't need to get on that soapbox. But anyway, that's just not my game. Bitcoin's not my game. So as soon as they made this announcement, I was out. And anybody who stayed in, you made some money, I think. I definitely made money, which is nice. To be wrong and still make money, that's a good thing, right? You don't get that often. Usually your lessons are expensive. Lessons don't pay you. But anyway, that's similar. I just want to do a quick word on them. Like I said, I don't think that I need any more time with them. Okay. So next I want to talk about Adcore. I'd said I wasn't going to do an Adcore video until I think the next quarterly results, but it's been beaten down so much that I feel like I got to do something, right? So first off, the short interest. Who the hell is shorting this? This, to me, I don't understand this. I understand shorting companies with a bunch of debt that, are way overpriced, but this is a single-digit PE in a high-growth sector with great capital allocation. They're buying back shares. You're literally shorting shares and the company's buying it back. That's crazy to me. And the primary short thesis, I think, is that this graph here, the 5-year return, if you look, is they're saying it's a lot to do with prices and with the post-COVID boom, and that you're going to have a normalization, so it's going to come back down. And they may be right to some extent, but I don't think it's nearly as drastic as what the shorts are saying. I think we're already like well into margin of safety, fair value area. But, to kind of go further on that, like if I go to Wire is another company I had that was highly shorted because of the same reasons. 5-year return was huge. And we looked at it, I think, on the channel whenever it was like $150 a share. And it was like 20% shorted at that time. And it got bought out for close to 300. So whenever something's bought out, to me, that's a sign that, hey, it really is not a market reaction. This is a private transaction was negotiated. They think that these tailwinds, that these industry, I guess, changes are here to stay. And Wire is going to be the same things that affect Adcore. I'm going to go back to Adcore now. Let's see. Yeah. And I'll just highlight real quick their financials. Let's look at the balance sheet. So one thing I really like about them, current assets, $1.5 billion. They have the same amount of current assets as all liabilities, not just current liabilities, but all their liabilities. You add current liabilities and long-term liabilities, it's 1.4. They have more short-term current assets than all of that combined, which means their stuff that's either cash or due to become cash in the next year is more than all their debt and all their liabilities. And that's on top of them buying back shares. So this cash pile would be much bigger if they weren't buying back shares, right? And just to put that into perspective, look at this, okay? Let's see, if I look here, this is where, total common shares outstanding. Right now we're at 36 million. We were 8 years ago at 60, so you're talking close to half the shares. I mean, it's crazy. That's exactly what you want to see with the company, right? All right, I want to show you their investor presentation. So yeah, and this is what I'm kind of hanging my hat on as far as there's a lot of things I'm hanging my hat on, but I really like that they're, published this goal of, okay, we're going to make $18 a share from 2025 onwards, right? And that really helps with the discounted cash flow. You take that and you combine that with these tailwinds. Let's see, where are their tailwinds? I love this thing here where it shows, what's driving them up and down, right? And the big tailwinds are these two on the end here, manufacturing and data centers. So manufacturing, I am intimately involved in that industry, and people are spending a lot of money in the US on expanding manufacturing capabilities. I think COVID helped that, but I also think things like the Build Back Better and all of these inflation reduction measures and just the desire to get more manufacturing in the States is really causing a big boom there, and everything needs electrical infrastructure, right? And speaking of electrical infrastructure, data centers, huge portion. Really think the stuff that Adcore provides, which here's a graphic of it, is, it's not the sexy pieces of AI or even of chip manufacturing, but it's essential. You need this in any type of manufacturing place. And I want to talk again about the short interest because I think this is important. If somebody has shorted something, unless it goes to zero, they're going to have to buy it back eventually. And if we get some good news and some, momentum, which it's bound to happen at some point, I think that this is a prime candidate for a short squeeze. You have 17% of the shares shorted, meaning about 6 million shares, and average volume is like 250,000. So that's a crazy days to cover. It's crazy high days to cover. But anyway, that is my take on Adcore. As far as other companies that I've covered on the channel, I don't think, like Jack, I don't think the thesis has changed there. Same with the boat guys, Mastercraft, Malibu. That's about it. Like I said, if I come across other interesting companies, I'll be sure to share with you. So I appreciate you taking the time to watch. Look at the Seeking Alpha thing. You won't regret it, and I'll see you next time.